Welcome everyone to this session. So this is a very special session because actually this is the session in which we are launching the forthcoming conference, which is the International Finance Conference in Colombia, in Manizales, Colombia. So thank you to everyone who have connected, who is attending actually this presentation. Well, today we have a very special guest. Today we have the honor of having Hernán Alzate Arias. Hernán currently serves as president of the self-regulatory body of the Colombian stock market, and he is a financial professional with over than 15 years of experience in capital markets, both locally and internationally. He previously served as vice president of the Treasury at Bancolombia, and he held senior roles at the ABN AMRO Bank and in the electric interconnection, which is being called esta. He is also being a senior professor at the Universidad EAFIT in Medellín, Colombia, and his career combines leadership in financial markets, investment strategies, and regulatory development. He holds a PhD in economics and finance from the University of Gdansk in Poland, and he has an MBA in finance from the State University of New York at New Paltz. And he also has a postgraduate certificate in mathematical finance from University of York. So for me, as the president of the International Finance Conference, it is actually a pleasure to have you here today, Hernán. Thank you for coming and for sharing your thoughts and, of course, your experience. Thank you very much, Hernán. Welcome.
Thank you, Samuel. It's a pleasure being here. I would like to also thank Professor Vivian Cruz from Universidad del Pacífico for taking into consideration joining this conference and share with the participants our views from the regulatory perspective. I will share a couple of slides if you allow me to do so.
Yes, of course.
Just double check that prior to begin the conversation. Just let me know if you can see it now.
Yeah, we can see it. We can see it perfectly. Yes, thank you.
Okay. So let's begin. So once again, it's a pleasure being with you today to discuss sustainable finance from the perspective of financial regulation. My central argument is straightforward. In Latin America, sustainable finance is no longer only a matter of aspiration, principles, or labels. It is increasingly becoming part of the architecture of markets through disclosure rules, taxonomies, governance expectations, scenario analysis, and market integrity standards. Colombia offers a particularly useful case study, but the broader regional implication matter for all of us, especially for those working at the intersection of academia, regulation, and market practice. Let me begin with a quick roadmap so you can see how I will address the discussion. As you can see, there are 6 main topics. The first one relates to key milestones and global standards. I will revisit those milestones that shape sustainable finance as we know it today. The second point, I will explain why this agenda matters now in a world marked by fragmentation, climate risk, and growing systematic complexity. Third, I will use Colombia as an anchor case to show how a market can move from voluntary principles to more formal regulation. 4, I will address greenwashing, disclosure, and market integrity, because credibility is now central to the entire discussion. 5th, I will share some evidence from sustainable debt markets globally and across Latin America. And finally, I will close with what I believe institutions such as AMB, as Samuel mentioned, AMB is the self-regulatory organization in Colombia, and how these type of organizations can contribute together with 3 brief takeaways. So with that roadmap in mind, let me start the presentation. So to understand where the field stands today, it helps to remember that sustainable finance evolved in stages. Here, as you can see, there is a path from 1971 as of today that relays those different stages. It focused on ethical exclusions, on the idea that the investment choices could reflect broader social concerns. That is the first stage. The second one moved toward financial materiality. Concepts such as ESG became more relevant because investors began asking how environmental, social, and governance factors could affect risk, return, and corporate resilience. The third stage is the one where we are living through now. The standardization and convergence initiatives such as PRI, SASB, the tax force initiative, as well as the IFRS methodologies. Those have shifted the conversation from broad aspiration to more disciplined disclosure. In other words, the key question is no longer whether sustainability matters for finance. The key question is how it should be measured, governed, and disclosed in a comparable way. Once we understand the evolution, the next question is obvious. Why has this topic become so urgent and of paramount importance right now? This slide is my bridge from history to urgency. The global risk landscape is telling us that sustainable finance is not a niche conversation. In the short and medium term, we are dealing with geopolitical fragmentation, conflict, misinformation, social polarization, and weakening trust in institutions. Over the longer term, environmental risk become even more dominant, including climate change, biodiversity loss, pollution, and resource scarcity. For finance, the implication is profound. Risks are no longer isolated events that can be analyzed one by one. They are increasingly systemic phenomena that travel through supply chains, insurance markets, sovereign balance sheets, asset valuations, and social stability. That is why anticipatory, evidence-based governance matters. Sustainable finance is one of the mechanisms through which markets try to translate those longer horizon risks into present-day decisions about capital allocations, resilience, and transition. Against that global backdrop, let me turn to Colombia, because Colombia offers a very useful regulatory case study. What it shows is that Colombia didn't jump directly into a fully developed regulatory framework. The process began with voluntary coordination. The Green Protocol and the early work with Asobancaria, which is the Colombian Banking Association, were important because they socialized the agenda and built initial capabilities inside the sector, the banking sector. Over time, that foundation became more formal. We see a stronger role for the financial superintendency, first through guidance for green bonds, and then through mandatory requirements related to disclosure, ESG integration, and climate information. A particularly important step was the requirement for ESG and climate disclosure by issuers registered at the Financial Superintendency, aligned with the Task Force on Climate-Related Financial Disclosures and the Sustainability Accounting Standards Board. We then see further deepening into rules of sustainability-linked bonds, the launch of the green taxonomy, and the extension of ESG integration requirements to collected investment funds. The essential point is that Colombia moved from voluntary principles to a more binding and operational framework. That is why it is such a useful reference within the regional discussion. Once that regulatory foundation is clear, the next step is to clarify what we actually mean by sustainable finance in practical terms. This slide allows me to make one practical point. Sustainable finance is not a single asset class, as it is certainly not one ideology. It is a toolkit. It includes green, social, sustainable, and sustainability-linked bonds, green lending, ESG integrated investment vehicles, and blended finance mechanisms that help de-risk investment with public or concessional capital. Investors are attracted to this space for several reasons: risk management, long-term return potential, regulatory alignment, reputation, trust, and access to new opportunities. But there is an important qualifier. If purpose is not supported by evidence, governance, and clear reporting, then labels can become misleading. That is why I prefer to think of sustainable finance not simply as finance with purpose, but as finance with purpose that is backed by measurable commitments, transparent criteria, and credible accountability. Now let me move from concepts to make this evidence more evolving through time. Sustainable debt issuance, for example, is now a standard feature of global capital markets. Asia Pacific, Europe, Middle East, and Africa, and also the Americas. Those are the major contributors. Americas also represent a consistent share of the global mix, as you can see from this graph. The source is Bloomberg. That matters because once a market segment reaches meaningful scale, the quality of information becomes much more important. Investors need comparability, issuers need clear expectations, intermediaries need discipline standards, and regulators need to be able to distinguish real financing activity from superficial labeling. So the broader lesson here is that sustainable debt is no longer experimental. It is established enough that questions of governance and integrity now sit at the center of the conversation. If we look inside that market, the next question is, what labels dominate? And what does that mean for credibility? Green bonds, as we can see, remain the most established and recognizable segment for the sustainable debt market. That makes sense, obviously. They are generally tied to identifiable environmental uses of proceeds, and investors have become more familiar with the label. At the same time, the market is diversifying. Sustainability bonds combine environmental and social purposes, and sustainability-linked or transition instruments rely heavily on targets, key performance indicators, and performance commitments. That diversification is healthy, but it also raises the stakes. The more flexible the label, the more important it becomes to have credible disclosure, external review, and alignment with recognized taxonomies or principles. This is where greenwashing, keep that word in mind, becomes a real market integrity issue. It is not just a communication problem. It affects pricing, investor trust, and the efficient allocation of capital. For regulators and self-regulatory organizations, such as IMF, that means credibility must be treated as part of market infrastructure. And that becomes even more interesting when we focus specifically on the Americas. This slide shows that regional market structure matters. The Americas do not mirror the global picture exactly. Here, sustainability bonds account for the higher share of the market than they do globally. That suggests a regional preference for instruments that combine environmental objectives with social priorities such as housing, inclusion, health, or broader development goals. In a Latin American context, that pattern is understandable. The region often faces environmental and social needs simultaneously. But that also means that evidentiary burden becomes heavier, not lighter. When one label is expected to carry multiple promises, investors need clearer reporting on use of proceeds, outcomes, and monitoring. So the regional lesson is that product design must be matched by equally strong disclosure discipline if the market wants to preserve trust. I'm sorry. That brings us to the most concrete regional issue. What is sustainable debt actually concentrated in Latin America? Mexico stands out as the regional leader in the data shown here. The source is Bloomberg, as I mentioned before, with Brazil and Chile also playing significant roles. Other markets are beginning to expand, but from a smaller base. There are two implications. First, sustainable debt in Latin America is growing, but it remains concentrated, and that tells us that market debt, institutional capacity, and issuer readiness still matter a great deal. Second, concentration is not necessarily a weakness. It is also a sign of where enabling conditions are already more developed. The opportunity for the region is to widen participation over time by improving disclosure, capacity, investor understanding, product design, and confidence in market standards. In the next slide, I would like to show how these issues also appear in asset management. The key message is that sustainable investing has grown far beyond a niche segment. ESG indices, benchmark and exchange traded products have expanded significantly, and the asset base is now very large. But the scale should not be confused with coherence. The market is concentrated, regional patterns differ, and product growth doesn't automatically imply consistent definitions or high-quality disclosures. In that sense, this slide reinforces the same thing we have already seen in debt markets. Once sustainability becomes commercially important, the credibility of claims matters even more. Growth creates visibility, but also creates incentives for superficial branding if standards do not keep pace. Related to that expansion is an inevitable question from market participants. How have these products actually performed? And here we have a couple of examples, the traditional energy XLE, which is the ticker for that specific ETF, and the clean energy ICLN, which is also an important ETF that tracks the S&P Global Clean Energy. Performance is cyclical, sector-specific, and heavily influenced by macro conditions. The recent relative strength of traditional energy and the outflows from some sustainability funds reflect a particular period marked by higher energy prices and renewed interest in carbon-intensive sectors. That is useful context, but it should not be confused with the deeper policy and risk management case for sustainable finance. From a regulatory perspective, keep this in mind. The key issue is not to promise outperformance. The key issue is to ensure that products are described honestly, that risks are communicated clearly, and that sustainability claims do not go beyond what the strategy can actually support. If I take one final option step in that market context, the next slide shows where innovation and product design may be heard. Here we have how those structures, styles, and the geography are evolved through time, We see growing importance for active management, more customized mandates, regional innovation in emerging markets, among other characteristics, that tell us the next phase of sustainable finance would not be defined only by product labels. It will also depend on analytical capability, local market knowledge, and the ability to adapt strategies to different institutional realities. For Latin America, that is both promising and demanding. Innovation can deepen markets, but only if it is matched by sound governance, better information, and professional capacity across issuers, intermediaries, and investors. Let me now bring the discussion back to institutional responsibility and the practical role IMA as a self-regulatory organization can play. IMB doesn't need to decide which sustainability strategy the market should prefer. Its value lies in reinforcing the conditions under which the market can function with credibility. That means strengthening market integrity, promoting sound ESG integration practices, supporting anti-greenwashing guidance, and building technical capacity through certification, training, and publication of technical documents. Those functions matter because implementation quality now matters as much as a strategic intent. In other words, IMB can help move sustainable finance from narrative to discipline practice. And for a self-regulatory organization, there is a very meaningful contribution to investor protection and to the quality of the Colombian capital market. With that institutional role in mind, let me proceed with the final three brief takeaways. First, regulation is moving the region from aspiration to architecture. Disclosure, taxonomies, governance, and scenario analysis are becoming part of core market infrastructure. Second, greenwashing is a market integrity issue. It affects investors, issuers, regulators, and self-regulatory organizations because it weakens trust and distorts capital allocation. And finally, implementation will determine credibility. Capacity building, comparability, external review, and professional standards now matter as much as a strategic intent. For Latin America, as is written at the bottom of this slide, the next phase is not more labels. It is better evidence, discipline, and better execution. Having said that, that concludes my presentation. I really appreciate your time and for taking the time to hear these remarks. Thank you very much.
Thank you, Hernán. Thank you very much for your presentation. It has been quite interesting. By the way, I would like to start with with a question, actually, because I have one. My question will be, recently you have published a very interesting paper concerning regulation in which you can build investment portfolios. And you have shown in that particular paper that actually whenever the regulation is very strict in building investment portfolios, so actually you attain a relationship between risk and return, which is not really optimal. Okay, so when regulation actually diminishes, so investment portfolios could attain higher returns at a lower risk. So my question will be the following. In line with this research that you just have published, actually, by the way, this year, my question will be, do you think that all these instruments that belong to the sustainability are capable of further diversifying investment portfolios in Colombia or in Latin America? Because your study was, related to the Colombian market. but I would rather say maybe Latin America or even the world. What would you say?
Samuel, thank you very much for your question. And in fact, when we are dealing with commodities, I mean the plain vanilla investment alternatives, and if you have restrictions associated to ESG, obviously that creates a constraint in terms of the risk-return trade-off. But some of them, if you have in mind that they belong to a kind of alternative asset classes, those alternative investments create alpha. So it is not the goal of a portfolio manager just to allocate a relevant percentage of the investments in those type of assets. But what is real issue is that when you include as part of the asset mix these type of alternative investments, it will create alpha for the portfolio in some sense. So for that specific issue, when you are just dealing with plain vanilla bonds or plain vanilla equities or stuff like that, obviously, if you just have a constraint associated to ESG, that will create the kind of situation you just mentioned at the very beginning of your question.
Yes, by the way, something that is quite interesting is that every time I'm seeing more evidence, because you were calling for evidence, actually. That was your main one of your main calls at the end of the presentation. I've seen every time more and more empirical evidence that actually all the instruments that are being linked to ESG are creating higher alphas rather than alternative investments such as cryptocurrencies, for instance.
Yeah.
But not only higher alphas, but also higher alphas with lower volatility. Because remember that those cryptos, for instance, investments, they are subject to very high volatile, environment. So this is quite interesting. So thank you very much for your answer.
So Samuel, it will be, as you just mentioned, alpha along with lower tracking error.
Right.
So you will be increasing alpha with a tracking error that will be controlled because of the type of investment.
Exactly. Well, I don't want to to monopolize all the time. So we have another question in the chat. Is from Eliana, precisely. She says, from the regulatory perspective, what should be the minimum criteria for the sustainability reports that financial entities actually should consider in such a way that these financial sustainability reports could be really comparable and useful for investors, supervisors, and many other stakeholders? I think that the question of Eliana is related to, for instance, the sustainability reporting that right now is really compulsory, and is becoming every time more compulsory. Actually, in Mexico, it's compulsory right now. And I have heard that in Panama, it's also compulsory right now. I mean, to the fact that corporate companies, they have to issue sustainability reports. So what would you say concerning that?
Okay, Samuel, the case in Colombia is the same. Fortunately, since 2021, the Financial Superintendency moved towards the green taxonomy. So that creates a framework where not only financial institutions, but also corporates that issue sustainability-linked bonds or green bonds are taking into consideration all these kind of requirements. So by the time they issue those kind of bonds or debt, they should comply with the green taxonomy. So in that specific aspect, I will say that we have moved from an early stage where that kind of sustainability requirements were more discretionary for the issuer, and now we are in a process with more discipline because the framework is already defined by the financial superintendency.
That this is very important. Well, this is an opportunity also for consultancy companies. But of
No
course,
doubt.
but yeah, right. But more than this, definitely it actually presents a very important and interesting challenge, actually, for many industries in Latin America. And let me tell you why, because actually there are many industries right now who are not tracking actually all the different environmental emissions that they are having. This is one of the problems. And another problem is the fact that if they are tracking those, they are tracking those in remote locations. This is what happens, for instance, in the mining industry. So they have to be very well organized in such a way that they can gather all the different indicators. For instance, the 20, I think it's 21 indicators, key performance indicators, ESG performance indicators that the regulation has established. So definitely this is a very important topic. I have another question here, and this question is from Vivian. She said, well, what do you think it will be the most important challenge that we will see over the next 5 years in the relationship between financial regulation and sustainability? What could you foresee for the future? I mean, what is the biggest challenge that financial regulation should take with relation to sustainability?
Samuel and Vivian, thank you very much for the question. I think that the most important challenge is just to move in tandem, not only the regulation, but also the institutions, financial institutions and corporate that are willing to issue sustainability debt. That provide us with early signals that we can implement and adapt in terms of the regulation. So, for example, if there is a greenwashing concern related to recent bonds issue in the local capital markets, in the domestic capital markets in Colombia, we can tackle that with the issuer and the financial superintendency in order to bridge that gap. So the next issuance will not suffer from the same problem, and so on. And there is also a discipline in our market, specifically for institutional issuers and also corporate ones, and is the fact that most of them have created sustainability divisions, sustainability areas that report directly to the top management. I mean, to the CEO and also to the board of directors. That creates a culture and that creates commitment. And that comes directly from the main guidelines provided by the company. I mean, that will be part of the strategy. And that paves the way for future challenges. So, as I said at the beginning, if we walk or we move in tandem, that will facilitate that the next stage will be less complicated than the previous one.
Okay. That's quite interesting. By the way, we have another question from Rogelio Ladrón de Guevara. He said, he wrote, from the regulator perspective, how do you realize when a company is really following the ESG principle or it is only making greenwashing?
Well, that is not as easy as it could be written. So there is a list of requirements, as I mentioned before in one of my explanations. So you have the green taxonomy. You have to meet those requirements. But in addition, when a company is about to issue that specific debt to the market, to investors, there is a double check, not only done by the financial superintendency, but also by the credit departments associated to the potential investors. So that creates a kind of double check stage prior to the issuance. But after the issuance, there are some commitments, some tracks, and some key performance indicators, ESG related, that should be met by the issuer. Otherwise, for example, you just issue, let's say that you have a SOFR or IBR or some flexible rate with a spread. So most of the time, what you just agree with the bank is that, or in terms of the hearings for the issuance of the bond, you have an step-up spread. So if you have, for example, so far plus 100 basis points, if you meet the requirements, but the time you just diverge from that for certain reasons, could be associated to exogenous reasons, but that creates a commitment that the step-up spread will come in place. So the next 6 months, for the next semester, you will no longer pay so far plus 100 basis points. You should pay 150 basis points. So by the time you diverge from the commitment, from the ESG related commitments, you have to pay more for that. So that there is not an escape for those, unfortunately.
No, there is no an escape, definitely. By the way, I have a final question that is puzzling me also, because actually recently in some developed countries, such as the United States, for instance, there is every time a discourse, okay, concerning ESG from the side of the companies, of corporate companies. For instance, the Fortune 100 companies. They claim that actually ESG practices were not really profitable for the companies. Let's put it that way. Okay, this is what is being called the business case. Okay, the business case of ESG. So they were not really profitable. They were like a kind of claim that saying, okay, it was okay to adapt to ESG practices. Okay, but and it was good for the society. It was good for showing us the corporate reputation, okay, properly. That is related to greenwashing, but beyond that. But the empirical evidence from the side of the portfolio managers, I mean the smart money, the guys who are managing investment portfolios, is completely opposite to the claims from the corporate companies, you know. So we have two different speeches, right? You are getting more into the speech of, okay, we are not going to put so much effort in ESG practices because it's not really profitable for the company. And we have the other discourse that says, okay, we need to involve ESG instruments in our investment portfolio because we can achieve, you know, a better return and risk profile. So what is the way in which you may reconcile these two different views? I mean, the view from the market and the view from the corporate companies. By the way, this is a certain sector. This is something that I should clarify, okay, right from the beginning. It's not the full amount of, you know, Fortune 100 companies that are saying that. But there are a certain group of people who are thinking that way. So what do you say about that?
Samuel, that's a reality. When you draw a line, which is a threshold, some could be inside and some will be out of it. I mean, ESG should be approached as environmental, social, and governance responsibility. So companies and issuers should invest and implement what should be implemented in order to comply with those standards. I will say, as an example, the International Financial Reporting Standards. back in the 80s, what we have, for example, you were located in Singapore, and Kevin, which is sitting here as well, is located maybe in Bahamas, and Vivian is in Buenos Aires, and Hernán is in Colombia. And we are analyzing the same company. But unfortunately, we cannot compare the peers from the same sector, because in every single country and every single sector, the way the accounting standards were treated were different. So the standards was different. So you cannot compare. Here, we are not only taking into consideration responsibility, but also market integrity, and we are in the process of taking care of investors' protection. And the reason why investors are benefiting from it is because, as you said, the credit charge associated to that type of investments diminish, because there are some mitigators, some mitigants, and some covenants related to ESG that reduces the credit risk associated to that type of investment. But you should, as an issuer, provide transparency and show with facts that you are responsible in terms of environmental, social, and governance issues. So it is not easy to find a common way, but the way we approach this topic should be more from the side of the responsibility rather than from the return approach.
Yes, exactly. No, a serious commitment to that particular philosophy. Yes, of course. So thank you very much. Thank you very much, Hernán. We thank you for all the interesting ideas that you provide us today. Okay, and we wish you to have here very soon again. So thank you very much.
Okay, thank you for having me.
No, my pleasure. Well, now I'm going to give the floor to Carlos Salamanca. So Carlos Salamanca, he's a member of the board of the International Finance Conference. And Carlos is going to introduce our next speaker for the next month. So, Carlos, welcome.
Yes, Samuel, thank you very much. Thank you for this presentation to Dr. Hernán Alzate. It's a pleasure to be here today with all of you. A special thanks to everyone who attend this conference.
You have to open your microphone, Carlos.
Okay. I'm sorry.
It's okay. I think Carlos has some...
attend this conference.
Okay.
And it's important to tell everyone that... could you hear me, Samuel?
Yes, I hear you.
Yes, thank you. Special thanks to everyone who attend this.
No, Carlos, your microphone already tapped.
Yeah, I'm very sorry, Samuel. Let's try again.
Don't worry. Okay, perfect.
Let's try again.
Let's continue.
I will start again. A special thanks to everyone who attend this conference with Dr. Hernán Alzate. I'll tell everyone who is here that each month we will have a special guest. That's why on April the 22nd, we will have Dr. Daniel Lacouture, who is an economist from the National University of Colombia. Also, he has a master's degree in economics and a public administration degree in a Columbia University in USA. Dr. Lacouture currently works as a director of sustainability at La Sobancaria in Colombia. It's important to tell everyone that you can find the information about this event and the main conference it will be held in Manizales University in our social media channels. So we will have Dr. Daniel Lacouture on the April the 22nd, and Samuel, probably you could show again the information about the conference of Dr. Daniel Lacouture. Thank you, Samuel.
Thank you. Thank you very much, Carlos. Thank you for the information. Yes, of course. So we invite you, all of you, to be present in the conference of Professor Daniel Lacouture in Sustainable Finance, How Banking is Driving the Sustainability Economy in Colombia. So today we have talked about from the perspective of the self-regulation capital market in Colombia. Now, next month, we are going to do it from the banking point of view. Okay? Remember that actually all the different conferences we are having right now, we are going to have those the third Wednesday of every month, okay? Starting from today, actually, okay? So, and all the different conferences are going to be related to the topics of the forthcoming conference. Actually, we have Kevin Malkahi here, who is present. Thank you for coming, Kevin. Kevin is going to be one of our speakers also among this series of presentations, okay, for the forthcoming months. Well, now I'm going to give the floor to Eliana. Eliana is going to introduce us, to invite us actually to the International Finance Conference in Manizales, Colombia. Yes,
Bueno,
Eliana.
les voy a hablar en español, me van a disculpar, es mi acento súper
Okay.
paisa. Bueno, no, les vamos a dar la bienvenida. Sam, si me puedes ayudar ahí a poner el video de la Universidad de Manizales. Esta versión de la IFC en el 2026 la tendremos en Manizales, Caldas, Colombia. Será del 23 al 26 de septiembre. Este año tendremos dos novedades para la IFC, y es que tendremos el primer encuentro de semilleros de investigación y el primer coloquio de posgrados, que se van a hacer antes de la IFC en la misma semana, para que se animen a invitar a sus estudiantes, a sus conocidos, para que participen de este evento. Será en la Universidad de Manizales. Ya tenemos la página oficial de la International Finance Conference, el sitio web oficial. Sam nos va a compartir el video de la Universidad de Manizales. Los esperamos, que todos participen. Tendremos ya los call for papers publicados para que ustedes puedan revisar las fechas, que no se les vaya a pasar las fechas. Tenemos el lanzamiento oficial, es el día de hoy, 25 de marzo. La recepción del resumen extendido lo tendremos el 12 de junio y la notificación de aceptación del resumen la tendremos el 31 de julio. Y la recepción del paper completo y el póster original lo tendremos el 14 de agosto. Entonces, igual toda la información y todo esto la tendremos en la página, ahí la pueden encontrar.
Sí, solamente una clarificación, Eliana. Ya no hay presentación de resúmenes, acuérdate. Es papers
extendido.
completos.
Paper completo, qué pena, sí.
Sí. So what we are expecting from you is to submit your full paper, okay, by the dates that Eliana has told us. And by the way, all these different dates are being scheduled in the webpage of the International Finance Conference. Okay. So now, thank you for coming to all of you. I'm going to leave you with this video. So let me see if you actually are seeing my screen, okay? Because I don't want to make any mistake now with the presentation. Okay, do you see my screen? Do you see the video?
Yes.
Okay, wonderful.
Somos una universidad que transforma la vida de estudiantes, graduados, profesores, administrativos y de la sociedad en general a través de la docencia, la investigación, la proyección social y la gestión, procesos que se soportan en nuestro principio fundacional, la solidaridad. Nuestro actuar está orientado desde una visión humanista para la formación de profesionales íntegros. Tenemos como base la noción de la economía solidaria que nos impulsa a ser universidad donde es difícil serlo, para propiciar condiciones de acceso a la educación superior de calidad de quienes no han tenido suficientes oportunidades de formarse profesionalmente. Nuestros graduados son ciudadanos críticos, creativos y comprometidos con el país, con el sello Universidad de Manizales que dimensiona la educación como una ruta para la sostenibilidad cultural, ambiental, organizacional, económica y social. Como comunidad universitaria tenemos el objetivo de seguir aportando al avance de la ciencia, la tecnología, la innovación y el emprendimiento para fortalecer la ciudadanía y lograr transformación social. Nuestra identidad ha sido forjadora de importantes desarrollos en relación con la búsqueda permanente de una educación de calidad. Promovemos una comunidad universitaria diversa en la que sea posible reconocerse en la diferencia a partir del respeto por las formas distintas de sentir, pensar y actuar. Cumplimos sueños y expandimos nuestras fronteras para decirle a la región, al país y al mundo que desde la educación seguimos transformando vidas. Somos la Universidad de Manizales, una universidad sostenible donde todo es posible.
Well, thank you very much for coming today. Thank you, and we will wait for you for the next presentation the next month. Okay, thank you. Have a very good day.